morning, I'm Angeline Ong and welcome to IG's early morning call on IG Live on Tuesday, the 11th of April. Coming up on today's programme, European equity markets are poised to open higher and the dollar settles after Monday's gains as the market bets on a hawkish Fed. Plus, don't forget the US earnings season is almost upon us. Banks will open the ball on Friday. Ahead of that, traders are also watching out for that key consumer price data out on Wednesday. Let's check in on the VIX ahead of all that. As you can see here, we are still seeing a downward trajectory for the VIX. However, as you can see with the arrow there, we did have some ructions there, no thanks to SVB and Signature Bank. But if you look at the band here that I've drawn for you, we have seen a climb down for the volatility index. Now, with 30 minutes to go until the European markets open, this is how the pre-market is looking across Europe, just showing you the FTSE in London that trades all sessions on our platform. That is up slightly. The German DAX, or the Germany 40 on our platform, similar picture there. And the CAC Quarante, or the France 40, also showing or indicated slight gains there ahead of the open. Prior to the Easter break, the Pan-European Stock 600 index did report its third consecutive weekly gain. Let's see if this momentum continues after that US jobs number suggested a resilient US jobs market, which of course in turn fanned worries about how much longer the Fed may need to raise rates. Now, overnight in Asia, stocks overall rose on hopes that the region's central banks will continue to pause or end interest rate hike cycles, whatever the Fed may do. South Korea's central bank, as expected, holding rates steady a second consecutive meeting. The Nikkei gaining, investors there welcoming the new Bank of Japan governor's first public remarks. Hong Kong stocks were mixed after data showed China's demand weakness continued. However, property developers there did gain ground. And Wall Street, well, even Wall Street, the major indices there ended mostly higher after a weak start. As I mentioned earlier, the resilient jobs market, along with expectations of that inflation data later in the week, is keeping a lid on big moves. This, of course, also those major earnings from some of the biggest US banks later in the week. Here's a look at the chart for you ahead of the Wall Street Open. Still quite a way off, but we are seeing a flat to slightly higher open as well there. Q2 earnings look likely to fall 4% year on year, according to Refinitiv data. Now, we're just getting some breaking news out of the UK. The BRC Retail Sales Monitor rose 4.9% in March from a year ago, maintaining the pace of the previous month. And this was also above market expectations of a 4.2% gain. Another consumption indicator, the Barclays card spending, showed that credit and debit cards went up 4% year on year in March, slowing from a 5.9% jump in February. All this could perhaps show that consumption is slowing, perhaps inflation as well. Now, over in Australia, Westpac's consumer confidence indicator rose 9.4% month on month to 85.8 in April, its highest since June 2022, boosted by the RBA's pause in rate hikes. Economic conditions in the next 12 months also rose 16.5%. The NAB business confidence indicator also rose to -1 in March from -4 the previous month. Economists expected an improvement to -2 on average, but the NAB chief economist, Alan Oster, warned that confidence was particularly poor in retail and wholesale, likely reflecting that firms are concerned about how much longer consumer spending will hold up. Now, turning to China, consumer price index there eased to a 0.7% growth in March compared to March 2022. It is the lowest reading since September 2021. The producer price index also fell for a sixth straight month in March year-on-year by 2.5%, faster than a 1.4% fall in February, matching market expectations, led by a decline in production and raw material prices. Now, at 10 a.m. this morning, retail sales in the Eurozone are forecast to fall by 0.8% in February, month on month, which means that the year-on-year decline is expected to steepen to 3.5% after a 2.3% fall the previous month. Turning to currencies, and the dollar hardly reacted last Friday to the release of non-farm payrolls. A number of jobs created came in broadly in line with consensus at 236,000, falling from 326,000 in February. Now, the greenback rose yesterday, though, as traders expected Fed rates to rise next month. Fed fund futures show a 74% chance of a 25 basis point hike on May the 3rd. Now, the market is waiting on the CPI data out later this week. And turning to other financial assets, just want to show you Bitcoin, because Bitcoin has been rather interesting, and it's tied to the whole Fed outlook as well. Bitcoin rallied the day in the previous session, and for the past few hours has been trading above that 30K mark. This is a first since June, this level rather. It's the first time it's reached this level in 10 months, and I've drawn that line there to just show you how far it has come. All this is partly because investors are raising bets that the Fed will soon end its tightening cycle. Coinbase, which you can also find on the IG platform, all sessions, well, that has also made a bit of a comeback. If I try and zoom in there for you, as you can see here on this green candle, up 8.8% on all sessions on the IG platform. However, Coinbase has also come from quite a tumble. Many cryptocurrencies have felt pain as rates rose last year, plus the collapse of various high-profile crypto firms have also left some crypto customers shouldering big losses. So the market on Tuesday will be, or Wednesday rather, will be particularly attentive to two central bank events. The first one at 3 p.m. will be the conclusion of the Bank of Canada meeting. Economists anticipate a status quo there. The overnight rate should remain at 4.5% like it has been since January. At its last meeting in March, the BOC stated that it should continue to hold rates at the current level should economic conditions develop broadly in line with expectations. The Bank of Canada was the first of major economies to pause its tightening cycle. And later on Wednesday at 7 p.m., the FOMC minutes will be released. Turning to corporate news, Cineworld has announced it's filed for bankruptcy in the US. Cineworld will continue, though, to operate its global business as usual. Plus, the other big story of the week will come later on this week when the US earnings season officially starts. As I mentioned earlier, three banks, the big banks in the US, JP Morgan, Citigroup, Wells Fargo, and healthcare giant United Health start and kick off the earnings party. JP Morgan is expected to post earnings of $3.43 per share on sales or revenue just shy of $36 billion. Wells Fargo, we're looking out for EPS of $1.13 there on revenue of $20.1 billion. And Citigroup, earnings per share of $1.71 on revenue of just over $20 billion. And just checking in on some commodities for you. Here's the picture for US crude. We're looking at quite a narrow band there, if you like, at around the 80.48, 80.47 level, because it may be that traders are waiting on that inflation data before making any big moves. Of course, we had that surprise from OPEC Plus, the output cut, and also worries about the global economy, which has weighed on oil prices recently. And a quick look at other commodities for you. Since we looked at crude there, we also have London sugar, London cocoa. Let's have a look at that first. London cocoa trading at its highest level since December 2016. But it's not just cocoa that has been trading higher. Sugar has also been powering up close to an 11-year high there, as major producers either have supply chain issues or drought, weather-related issues which are hurting production. Well, that's it for now. Before I let you go, a quick reminder that we do have charting at 10:30, and we'll also be counting down to the Wall Street Open for you. I'm Angeline Ong, and this is IGTV.